Most people have no idea that one of the biggest financial stories of 2026 isn't happening on Wall Street. It isn't about the latest AI company, it isn't about a stock market rally, and it isn't even about gold. It's happening quietly, deep inside mines, factories, energy projects, and supply chains spread across multiple continents. And it revolves around a metal most people rarely think about: silver. For decades, silver was often treated as gold's little brother, an alternative investment, a commodity that occasionally attracted attention during periods of inflation or financial stress. But something has fundamentally changed. Silver is no longer just a precious metal. It has become an essential industrial resource sitting at the intersection of three of the biggest forces reshaping our world: the energy transition, technological expansion, and global monetary uncertainty. And here's what's really happening behind the headlines. The world is simultaneously asking for more silver while struggling to produce enough of it. Few people understand the chain reaction that could unfold, because when supply and demand become structurally imbalanced, markets eventually adjust, sometimes gradually, sometimes violently. Today, we'll connect the dots. We'll explore why 2026 may become a defining year for silver, why investors are paying attention, why governments are increasingly concerned about resource security, and why ordinary people should understand what these trends could mean for their savings and purchasing power. We'll cover 6 major insights. First, what's really happening beneath the headlines. Second, the hidden supply problem. Third, the transformation taking place on the demand side. Fourth, the historical lessons that investors often forget. Fifth, why smart money is watching carefully. And sixth, what all of this could mean for ordinary people trying to protect their financial future. Because sometimes the biggest stories are the ones nobody notices until it's too late. Let's begin. The silver story isn't really about silver. It's about systems. Here's what most people don't realize. Think of the global economy like a giant machine. Every component depends on another component working properly. Energy powers factories. Factories build technology. Technology powers productivity. And silver quietly sits inside many of those systems. According to recent industry reports, the global silver market is expected to experience its 6th consecutive annual supply deficit in 2026. Years of undersupply have steadily reduced available inventories and increased market sensitivity to shifts in demand. Mainstream media often misses this because silver isn't flashy. Oil gets attention, stocks get attention, Bitcoin gets attention, silver doesn't. But silver is embedded inside the infrastructure of modern civilization. It's inside solar panels, electrical contacts, medical equipment, electronics, military systems, and advanced manufacturing. And unlike many commodities, silver has a dual personality. It's both an industrial metal and a monetary metal. That combination makes it uniquely interesting. When industrial demand rises and investors simultaneously seek safe havens, pressure can build quickly. And if you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly because these stories are rarely isolated events. They're connected pieces of a much larger puzzle. Now let's talk about the supply side. Imagine trying to fill a swimming pool while someone keeps turning off the hose. That's essentially what's happening in the silver market. Mining is an incredibly complex business. You don't simply discover a shortage and open a new mine next month. From exploration to production can take 10 to 20 years. Meanwhile, ore grades around the world have been declining. Energy costs remain elevated. Environmental regulations are becoming stricter. And geopolitical risks continue to rise. Countries like Mexico and Peru remain dominant producers. China plays a crucial role in processing and industrial demand. Australia remains a major producer. Russia continues to operate under geopolitical constraints. Chile's mining sector faces its own challenges linked to energy and water availability. But here's the most important detail. Most silver isn't actually mined for silver. Roughly 70 to 80% of global silver production comes as a byproduct of mining for copper, zinc, and lead. That means silver supply cannot rapidly respond to higher prices because producers are responding primarily to the economics of other metals. That's a structural issue. Even if silver prices rise dramatically, miners can't simply flip a switch. Supply remains relatively inelastic, and that's what makes this market different. The world can demand more silver tomorrow, but producing more silver could take years. Now let's discuss demand, because this is where the story becomes fascinating. Many people still think silver demand is driven mostly by jewelry or investors buying coins. That was true decades ago. Today, industrial demand dominates. Silver is one of the most electrically conductive materials on Earth. That makes it extremely valuable. Solar panels require silver. Electric vehicles require silver. Artificial intelligence infrastructure requires silver. Semiconductors require silver. Defense technologies require silver. Medical technologies require silver. The modern economy increasingly depends on electrification. At the same time, the world is racing toward energy independence. Even though manufacturers are actively reducing silver usage through efficiency improvements and experimenting with copper substitutions, overall structural demand remains significant because deployment volumes continue expanding. That's an important nuance. This isn't a simplistic story. Technology evolves, industries adapt, but scale matters. If you're building millions of solar installations every year, small reductions per unit don't necessarily eliminate demand pressure. This is why silver occupies such a strategic position. It isn't merely a commodity anymore. It's part of the infrastructure behind the global energy transition. And if this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert, because understanding these relationships matters more than following daily price fluctuations. Now let's zoom out and ask a bigger question. Have we seen this movie before? History rarely repeats perfectly, but it often rhymes. The 1970s taught investors that inflation can persist longer than expected. The 2008 financial crisis reminded us how interconnected financial systems have become. The COVID disruptions exposed the fragility of global supply chains. The energy shocks of recent years demonstrated how quickly geopolitical tensions can ripple through entire economies. Each event shared a common characteristic. People assumed existing systems would continue functioning normally, until suddenly they didn't. Silver has historically performed in periods of uncertainty because it sits at the intersection of industrial necessity and monetary concern. When confidence weakens, people seek tangible assets. When infrastructure spending rises, industrial demand increases. When both occur simultaneously, silver attracts attention. We've already seen episodes like the retail silver squeeze and repeated concerns over physical inventories. Those events weren't necessarily causes. They were symptoms of a market that is structurally tighter than many people realize. History teaches us an important lesson. Markets often ignore risks for years, then suddenly price them all at once. That doesn't guarantee any specific outcome, but it does explain why preparation matters. Now let's talk about smart money. Because sophisticated investors are paying attention, not because they're making wild predictions, but because they're watching macroeconomic trends. Global debt continues to expand. Government deficits remain elevated. Currency debasement concerns persist. And many countries are seeking to diversify away from excessive dependence on the US dollar. BRICS nations continue exploring alternative trade arrangements. Central banks have dramatically increased their gold purchases over recent years as part of broader reserve diversification strategies. While central banks don't heavily accumulate silver itself, the monetary trends supporting gold often spill over into silver. Family offices are paying attention. Institutional investors are paying attention. Commodity specialists are paying attention. According to industry forecasts, retail investment demand for silver is expected to remain strong in 2026, helping support the market despite softer industrial segments. The reason is straightforward. People are looking for assets outside traditional financial systems, not because they're predicting collapse, but because diversification is prudent. And if you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. Because macroeconomics isn't about predicting tomorrow, it's about understanding probabilities over time. Finally, what does this mean for ordinary people? Because this isn't really about silver investors, it's about everyone. Inflation affects everyone. Currency depreciation affects everyone. Energy costs affect everyone. Supply chain disruptions affect everyone. Most people work hard, save diligently, and hope their purchasing power remains intact over decades. But preserving wealth has become increasingly difficult. No one can predict the future with certainty, but understanding the forces at work allows people to prepare rather than react. That's the key distinction. Preparation instead of panic. Practical principles still matter. Diversification matters. Long-term thinking matters. Risk management matters. Patience matters. No single asset is a magic solution. Silver itself carries volatility. Prices can rise quickly. Prices can fall quickly. But education creates resilience. The goal isn't speculation. The goal is understanding. When you understand how supply chains work, how debt affects currencies, and how strategic resources influence economies, you're better equipped to navigate uncertainty. And perhaps that's the biggest lesson of all, because markets reward preparation. They rarely reward complacency. As we wrap up today's analysis, let's remember what we've learned. This story isn't about a single price target. It isn't about predicting an exact date. And it certainly isn't about fear. It's about recognizing structural changes happening beneath the surface. The world is demanding more strategic materials. Mining cannot instantly increase supply. Industrial transformation is accelerating. Debt burdens continue growing. Geopolitical fragmentation is reshaping trade, and ordinary people are increasingly searching for ways to preserve purchasing power. Markets move in cycles, headlines come and go, but the laws of supply and demand never disappear. Silver may not dominate financial news every day, but its importance inside the global economy is growing. And history shows that resources often become strategically important long before the public notices. Pay attention to the trends most people ignore, because sometimes the biggest opportunities emerge long before the crowd notices. The silver story of 2026 may ultimately be remembered not as a price story, but as a story about infrastructure, scarcity, and a changing global economy. The people who understand these shifts won't necessarily predict every market move, but they'll have a better framework for navigating uncertainty. And in today's world, that may be one of the most valuable advantages a person can have. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.